Good morning, Ren, Brock. How's everyone doing today? Hi, Didier, Hugo. Let's take a look around the board. S&P's fighting their way back. Hugo, how are you? Didier? Yes, it did. Good morning. Sinatra, how are you? Arena, Raj, Amira. Oh, happy Purim tomorrow. That's right. Okay, I don't know what going all Catwoman means. It's a new trading term for me. Anyway, looks like we had a blow off yesterday in cable, doesn't it? After it blew out divergence. And, it had a wild night in Euro Pound. It collapsed and fighting its way back after taking out a major trend line at 86. And the turnaround Tuesday trade did work in oil off the 3 drive. It was probably trading around 60, a little over 62 up here yesterday. And then we had the big break. And then it failed from 61.8, and now it looks like it's got a shot for another high. So we'll see. I know there's some resistance in S&Ps around 39.10. The 2-week off number is 39.40. I don't think we get there. A lot of people are saying this was enough. It may be. Everything's possible. Look at what it held, the S&Ps. Look at that, the 50-day moving average, to the tick. So all I could say is under yesterday's low, there's big problems in the market, but the 50 days saved it. And we're not that much lower on the week. And an interesting look with US dollar yen. Hello, Monica. That we're on the way for a third drive up here. Here's one, here's two, and looks like we're going to get a third. First, it shook out the longs here. Okay. And when you look at silver, it's still kind of lagging. This still looks kind of corrective. I'm kind of surprised with the yen this strong that the metals are up. Okay. Anyway, just like the low in the S&Ps from yesterday is important, this low in gold is very important. I showed you the big picture descending triangle here. So, it's had a bounce, but nothing that impressive, right? And the bounce has been a little more impressive in silver. Also, Aussie on some shorter term momentum indicators is now starting to look a little heavier. And I want to wrap it with this, for as bearish as the market is on the dollar, it sure hasn't collapsed in the last several days after taking out that 90.12 is the fib number. And this is starting to look like a little bit of a false breakdown here in the dollar. Back over 90.42 by Friday is a 2-week reversal. Here you could see it here. And I just think that with all the bearishness, I don't know why we're not at new lows. I mean, it feels like sentiment-wise and what the pound was doing that we should be at new lows. Doesn't mean we can't do it, but it's sure taking its time with the 80% bulls on most of the currencies and 20% bulls on the dollar. For as bearish as the market is, they're not making much progress. I
couldn't agree with you more, Dale.
Yeah, what do you, yeah.
Yeah, I was looking at that also. I mean, how many traders, we've been looking at this euro dollar with if you pull up the euro, we've been looking at like this inverted head and shoulder pattern, like on intraday. And
yeah, oh yeah, I know. Okay, now I know what you're talking about.
2 or 4 hour chart. 4 hour chart's probably better, actually. Yeah, we have been this inverted head and shoulder pattern. Everybody's like, oh, this is gonna, it's gonna break out. You can actually zoom out a little bit and you can really see it. And we just have not been able to take out the neckline. And today is going to be the second day of Jay Powell. Jay Powell did not rock the boat yesterday, right? He didn't say anything
Yeah.
that we didn't
What
know.
a surprise. He was dovish.
Yeah, I mean, he's dovish. Rates aren't going anywhere. We're going to continue to provide liquidity. Blah blah blah. Give everybody the green light to buy stocks. This is it's the same story that we get every single time. Yet the dollar should have really weakened. Now we did see the Aussie and the Kiwi, break higher, and a lot of that was and as you pointed out, the sterling
Cable. Yeah.
nice squeeze, right?
Yeah.
And then we had the Kiwi ran higher on the RBNZ, but in all actuality, the dollar should be a lot weaker, right? Just as you pointed out, it really should be.
Yeah. And I have 2 week off number plus this moving average here, Blake, at about 90.42. Now weekly reversal signals you don't know till Friday, right? Because you have to wait for the end of the week. But
yeah,
back over 90.40 is going to be kind of a sign to me that that there could be a surprise to the upside. And maybe I mean, if you look at Greg's work, and I know you do, he was looking maybe not for as extreme of a rally as we had, but he's calling this a 5. He thought we'd get a pullback and then one more push up. It looks like they did everything last night.
Yeah, and I think one of the big moves overnight, which really may have it might have really done it in for the dollar bears, is what happened in the sterling. I mean, that because the pound pushed higher to what 142.
Yeah, 42 over 20, I believe.
Yeah, and that spike happened while I was at my son's soccer practice, and I picked
42.40, Blake.
42.40. That spike, that was a complete stop run. I bought a little bit of euro pound on that dip, and because that was my chart of the day yesterday. So I had my eyes on it. But man, I'll tell you, that may have sealed it for the dollar bears, because they were that should have really manifested in a big euro move, and the Aussie should have continued higher, and because it didn't, I think we are at risk for a dollar bounce now. So
okay.
But I guess a couple other things need to happen, right? Dale, and here I'll take over the screen. How about we have to see, I think we have to get past Powell's testimony today, right?
Right.
I mean, we've got to see what he has to say, and
I also think what might be a factor for it is there was really no bid on the first break in NASDAQ and S&Ps. I think that if these rallies fail in risk in equities in particular, it's hard for me to see that happening without at least a bear market rally in the dollar.
Well, you know what? If you guys are not part of the ForexAnalytix community, this is our chat room, just so you guys can get a good view of what our chat room looks like. And it's been I've been busy, haven't been in the chat room as much this morning because I've been uploading support and resistance levels and doing some things that Steve typically does, and Steve is out for the week. But you can see this is just from 2 hours ago when I got up. I mean, I got up about right here. This is where I got up. And you can see all the chatting that's been going on since then, a couple hours ago. But this is Andre just popped in our chat room, and you guys know who Andre is. He does all of our Elliott wave work. Oh, I'm trying to get to his chart.
Harmonic work, right?
Yes. Did I say Elliott wave? I'm sorry, I meant harmonic. Sorry, I'm trying to do two things at once. That wasn't the chart that I wanted to see. He just posted there. This is the S&P, and he's like, hey, you got to watch this inverted head and shoulder pattern. So just as we were talking about that, Dale, and I'm going to pull this back over here. We were just talking about equities. We do have to be careful of a possible inverted head and shoulder pattern. I mean, let's face it, the pound or the equity markets broke through that support, that 3870 that we were watching yesterday. I mean, took out all the longs, even broke some of these minor lows and then bounced right back up. I'm not saying that you should be bullish right now, but I mean, that is, that's what Andre's saying. And that's, doesn't mean that's the right view, but well, you know what, Dale?
You have to consider everything.
You do. But also I wanted to say,
the dollar's popping now.
The dollar is popping. They must be watching this webinar and watching you, Dale, because they're just, they're ripping it now. Cause look at the euro.
Yeah.
Look at the euro and this is the inverted head and shoulder pattern that, I mean,
that's failing.
We've been waiting for this thing to break. I mean, I'm like every day. And if you guys are not part of the, getting the bias chart every day, resistance 121.80, resistance 121.70. I mean, that's what we keep writing on the euro, and we just cannot get above this resistance, and it's, showing failure. So, at what point do euro bulls or dollar index bears, at what point do they give up and say, well, forget about it, right? I'm just not going to do it. I'm not getting paid right now for being short dollars. So now I'm just going to have to get out of my dollar shorts and, start buying them back. I think you're going to get that dynamic soon.
It may be today. It's
could
starting
be
today. Yeah.
Yeah. Could definitely be today. Now what's the other big thing that's really brewing here, Dale? The bond market.
Yeah.
And Stelios is here, and I'm sure he's listening in because I want to get his comments. I mean, look at here's an example of the 30-year.
Yeah.
And you can see how we are racing to new highs. The 30-year, even relative strength is breaking out, after being overbought, consolidating. Looks like we're, pushing back above 80 intraday. That might put the 30-year closer to 230. But also, if you look at like the 10-year, the 10-year is also trying to break higher, right?
Yep. And US dollar yen rallying with it. So, US dollar yen, I think if you look at it, we have two drives. Looks like it's going to make a 3 here. And also, I did listen to one of our guests, and he was looking for a peak in rates Tuesday, Wednesday, actually Mark Newton. So we'll see if that call is right. We're definitely, it's moving in the direction of its forecast. So he's thinking, I'm thinking one more high in the end, and we're close to this type of maybe the first wave out in yields, and maybe yields can pull back to 1% again over the next several months if things are weakening. So anyway, that's what I heard from Mark.
So you're talking about here, this is wave or 3 drive. So that's
right.
Your 1, 2, maybe the third one takes us up to 50% retracement.
Yeah.
Above new highs. And that's entirely possible. And I picked up dollar Swiss yesterday at my average is like at 90.05 or something. But yeah, I mean, this,
nice.
Look at the Swissy. This is a yield sensitive currency.
Also, it wasn't making new lows with the dollar. Another one, kind of like what USD MEX did last week.
Yeah. And I mean, you've got to pay attention to, things, Steph is in our chat room, and she was just saying, the 10-year yield at, rallying. How do equity markets not pay attention to that? And and you guys know as well as I do, the markets don't care until they do. Right, Dale?
Yep. They don't care, and then there's a tipping point, and then
then there's that tipping point that they just go, what the hell? And, what are we doing up here? Why are yields here? Why are stocks way up here? Why haven't we factored this in? And all of a sudden there's that tipping point where things just start to, take hold. One of the predominant factors of this market, the predominant factor of this market for so long has been massive amounts of liquidity being put in the market. I mean, it's just, it is that. It's just massive amounts of liquidity being put in the market. And that has been the predominant overarching theme that just keeps stocks higher, rates have been lower, generally speaking, up until recently. And, the dollar weaker for the most part. And that's it. And asset prices higher. And at some point, you're going to start to see these yields that are factoring in stronger growth, a stable economy, a return back to 2019 levels. And at some point, the market's going to go, oh, yeah, we need to start thinking about what tighter monetary policy is going to be like. So, Stelios, are you here this morning?
I am here. Good morning, everybody.
So let's talk a little bit about
Morning,
the
buddy.
yields moving higher and
Yields.
some of your comments.
Yes. First of all, we saw Powell yesterday, and as expected, as we said here on the webinar, there's no way he could have been anything else than dovish. And he was dovish, and he said, basically, we're not going to lift off.
Why is that? Why can't he be hawkish? Like, why?
Well, the big difference between now and, say, 10 years ago is that the level of debt has gone up exponentially. The Fed's balance sheet is, what, 7.5 trillion now, and growing at a big rate. So when we talk about normalization of rates, there's no way, I think, that the markets could handle, 5, 6, 7%, 10 years like we had that 10 years ago. It was very easy. But now it's very difficult to get that. And they know that equities and risk assets are going to have a big tumble if yields start rising. We saw that with 2018, early 2018, when we had a drop there because of rising yields. So I think Powell knows that they simply cannot afford to have higher yields. So what do? They just keep the gas, they pedal to the metal and keep going. That's the problem that they have, and again, it's now like a vicious circle. You issue more debt, you have even bigger need for lower rates, and it's I don't know how they can get out of this, but
just interest expense on U.S. debt has tripled. Everyone talks about how low rates still are, but if someone tripled, say you had a credit card at 5%, and then 6-8 months later you're at 15, that's going to have an impact on your liquidity and and on servicing the debt.
Yeah.
Well, what I'm gonna say, and that's obviously a big issue, and it's like you're stuck in this cycle, as you pointed out, Stelios, and it's like, what does the Fed do? I said this on said this on the Daily Roundup yesterday. I mean, they're painting themselves into a corner. Right?
Yes, the problem is you have to do something at some point. Every month that goes by, it gets tougher. They should have done something 5 years ago. They didn't. They can still theoretically start removing liquidity. I know the markets are not going to like it, but if it's done progressively and it's not something that shocks the market too much. Although, having said that, if Powell just says one wrong word, just like you said yesterday, one wrong word, the market is going to get spooked, because we've come all this way simply on the back of zero rates and ample liquidity. There's no other reason. That's the problem. So they have to do something very gradually, but I think it's very difficult to do it. But and if they wait more, it's going to be even more difficult. So what do? They have to do something today. That's the problem.
So, today we have the second day of, of Powell's testimony, right? We have this, and it's funny. Peter just pointed out in the chat room that, it's, over these Zoom calls, they tend to be less aggressive than they would be if they were in person, which is because it's all, political theater. And you get all these politicians asking, questions that just for sound bites, right?
Yeah.
Not actually asking some of the harder questions. What if one of the senators gets the Fed chair to really say something that he didn't mean to say? And usually it's day one that's the market mover. Yesterday, then we were like, okay, we've heard it all before. This is nothing. But what if he says something that really moves the market? I think, the risks are at this point. I mean, I pulled up DSI for a reason. Okay. I want to show you guys what this is. This is the copper 93, 93, 93, the last 3 days. You have, all of these extreme readings on some of these commodity currencies and commodities, bonds, so on and so forth. Bonds should, based on DSI, bonds will probably actually peak out today at some point. Yields might actually start to come down as we get a little bit of risk aversion potentially. But what happens if some of these extreme sentiment start to weigh on the market, which is entirely possible. And if he says something that actually is anything but his normal mantra, we are at risk because of all these extremes of pulling back a little bit.
Yeah, I agree. But, the problem I have is that I don't see who's going to ask the tough questions and who's going to make him say something he doesn't want to say. So I just think today, unfortunately, it's going to be a carbon copy of yesterday, and we remain in the same mode, easy.
Yes. Yeah.
Unfortunately.
That's what I also agree that he is going to probably, say the same thing, and it's going to just rattle off the same.
And guys, you ever think of this? Yellen was his boss, right?
Yes.
Before he became chairman.
Yeah.
And do you think he's going to deviate much from Yellen, since maybe she was also kind of a mentor to him? And remember when he tightened in January, and then Yellen and Bernanke and him all got together and held hands? So I think really the Fed chairman is Janet Yellen with a different job title.
Well, I think the Treasury and the Fed are very closely linked, and there's no way they're going to want to, shock the markets or destabilize the markets. Let's say. So
I'm saying he's probably pretty influenced by Yellen, since he worked for Yellen, right? Yeah. And she was successful. Yep. And then he started to become unsuccessful because he wanted to do the right thing, and Bernanke and Yellen got together with him and straightened him out.
And it's unfortunate because Powell started off with such promise. He was like a breath of fresh air, and then slowly now he's become Yellen.
Yeah.
So yeah.
Right. Okay, so I'm gonna give you guys just a couple of levels that I think we should be watching, just in case we do get a reversal, because let me point out maybe the not so obvious things. Okay, so let me go ahead and start with that. We were looking at this, potentially inverted head and shoulder pattern on the S&P, right? Yeah. It's possible. But I also want to point out that we are also making lower highs, right?
Yep.
Lower lows, right? So let's not ignore that. Let's also recognize the fact that we are in, and let me get rid of this crap really quick. We're in an ascending wedge. You can see this green line, which is easier to interpret this as, while you're above that green line, you just stay bullish. But you get below that green line, then you turn bearish, because now we have, what Dale would call throwover or megaphone pattern, whatever. This break below this trend line should actually take us back towards 3,600. I know a lot of you guys are like, wow, 3,600. There's no freaking way we're going back down there. Okay. But that's one, I think, one of those, things that you have to be paying attention to, especially with the extremes that we're talking about. Then I'm going to take you over to copper. Copper is not something that I normally, look at, but in the case of, having daily sentiment index at 93 for 3 days in a row and being at the golden fib at the 161% extension, if we start to see copper slip back below, 410, definitely back below 4, then you got to start thinking, how's that going to affect currencies? And the one currency that I think you should be paying attention to right now is the Aussie, which I know the Aussie's in breakout territory. We're also 3 days left before, the end of the week. Today is hump day, so it's Wednesday. And we're just kind of stalling here. So if copper starts to roll over, the Aussie starts to roll over, it could set us up for a false breakout by the end of the week. There's a lot of shorts that have gotten out of here. And hold on really quick. We do have a guest coming on today.
Yeah. It was tweeted with the wrong handle. There's a 714 at the end, not just Joe Friday. Anyway, I'm letting them know.
Oh, okay. So,
and I'm letting you guys know when you post it later.
You know what? That's we've let's see if we can correct that now. Stelios, you want to talk for a moment? I'm gonna go ahead and fix this. All right.
Sure. So we talked about yields. I think the yen is important to look at. I know Blake mentioned it. The yen seems to be following risk now, and this correlation between dollar yen and equities and risk assets in general has been a little bit unstable recently. It used to be really really good, really tight, but now it's been a little bit more unstable. But the yen is definitely following risk higher. And of course, we need to mention Bitcoin and cryptos, which I don't think Bitcoin got to the level where we talked about 42,000 being a buy level. And yesterday, where did it get? It got down to 45, 44 something. Yeah, okay. But, it's like with Powell out of the way, or at least almost out of the way, and equities grinding higher and recovering really impressively from the lows yesterday, what's there to do? Well, everybody's gone back to cryptos now. So you see Bitcoin, Ethereum up 2, 3, 4, 5%, which is I know low for their usual daily volatility, but they seem to be back in fashion today. But overall, like we said on the chat room, I think we are overstretched in terms of equities. We have been for a while, but I'm saying, don't get in the way. I haven't shorted equities. I don't think, I haven't been bullish, but I haven't shorted them either. I will only look at risk-off trades if we get a daily close below 3,800 on the S&P. And, it looked like it was close yesterday, but obviously we had the big reversal. So unfortunately, in the big picture, nothing has changed in equities. Nothing has changed in yields yet. We're very close, but we're not there yet. So unfortunately, as a result, nothing changed in the dollar either. So it's a holding pattern. We wait, and
wait.
It's a very difficult market because there's very few things that I want to trade at the moment, and I have to sit on my hands.
Yeah, and I mean I'm going to leave you guys with one thing and before we go, but before we turn it over to Dale, I like I said, I want to mention one thing. And remember, guys, if you haven't tried out ForexAnalytix, make sure you do so. You visit our webinar sponsor, Pepperstone Securities. If you just go to where it says Forex Sponsored, you can be part of the ForexAnalytix community for up to 4 months free. If you just open a live trading account, you have to use this link that's actually on our ForexAnalytix site because it connects your account to us, so we can actually connect the two systems together. But if you're not part of the ForexAnalytix community, it's only $1 to try it out, and then you make sure you download the app from the Google Play Store or the Apple Store. So you have all the analysis at your fingertips, and so you can listen to all the webinars that we do throughout the course of the day. Now, I want to mention one last thing before we turn it over to Dale. And Stellius, you probably have something to say about this. One of the things I've always, and I was talking about this in the chat room, and I want to kind of, clear what I was saying here, just so you guys understand what I was saying. One of the things I've always loved about the markets in my career since 1995, when I started really learning about the markets then, and studying for my Series 7. I love the fact that the markets was a changing, just organism, if you will. There's different drivers, there's different things that are moving the markets, and you're always learning something new virtually every day. I mean, literally every day you learn something new in the markets. And I feel like this last year, with the massive amounts of liquidity from a monetary and fiscal standpoint globally, it's just been a one-way market, and it's the same story every day. It's like Groundhog Day in the markets, right? That dynamic's going to change, and it's probably going to, and we're probably in the, we're in the, vicinity of that changing, where, the market doesn't care until it does, type of phenomenon. Like, we were just talking about earlier, the markets don't really care about a lot of things right now, but they will. And when they do, you got to take notice. So don't stop recognizing the things that are moving. Yields are moving right now. Yields are moving. Commodities are moving. One of those two are probably going to end up breaking soon. Stocks continue to just to grind it out, but it seems like momentum's slowing. And once momentum shifts in the equity markets, that's when we start to see volatility really pick up. And watch cryptos too. All right, Dale, I'm gonna let you take over so you can do the interview. And
Okay.
I want to thank everybody for being
Joe,
here today.
If you're in the house, will you send me a message on chat, please? So I think we've had a mix-up here, and I don't think Joe is here.
Oh,
so I touched base with him yesterday, retweeted everything. Are you here, Joe? No. Okay.
Okay.
All
Actually,
right,
can I answer one question very quickly
Sure,
before
go
because
ahead.
if we don't have the guest, we're going to wrap it up, right?
Yeah.
Jack is saying, what in my mind is a risk-off trade nowadays? Dollar yen short or commodity currency short? What I'm about to say will probably shock you, Jack, but I think I would want to put a trade on that's going to move a lot. So I think, even though I love this currency, I think I would be playing dollar Norway longs, because it just, it's, first of all, it's done a really nice reversal, very big reversal so far, lower, and because it just gets on steroids when we get risk off, and I think that's going to move. So one is one of them. Dollar yen probably. Commodity currencies in general, I think, are probably going to be the best bet.
Yeah, and it's I was just thinking as you said that as well. It's like you look at the dollar Swiss and you look at the dollar yen. They've had great runs. By the way, I've if you guys are,
Joe's here now.
Huh? Oh, Joe
is here.
Okay, yep. I'm gonna let you take over. For those of you that picked up the dollar Swiss yesterday with me, I did take profits, not all profits. I took like half the profits this morning because I am a little worried. If yields come down today, remember bonds daily sentiment index is very extreme. So if bonds start to come down, or bonds start to bounce and yields start to drop a little bit, you gotta be careful with risk. Anyway, all right. Well, thanks everybody for tuning in. Dale, it's all yours. So
all right, thank you, Blake.
All right, man.
Hello, Joe.
Thanks, Dale.
Thank you, Stell. Thank you, Blake. Hello, Joe.
Thank you, Coach.
Unmute. Looking forward to talking to you and seeing what. Okay, Joe, I see your charts. I'm waiting for you to unmute.
All right, I'm here.
All right, buddy.
Morning. I'm sorry. I was having some computer issues. I keep telling you, I'm somewhat computer illiterate. So.
Okay, that's fine. I know it's February, but Happy New Year. Haven't talked to you for a while. We had this big sell-off in S&Ps, Joe, and the bounce back. It looks like you're expecting some type of failing rally into the supply zone up here.
Yeah, well, right now, yeah, I'm looking. We anticipated the bounce from demand, and we're looking now to see if we're going to get a rejection either at this trend line area or maybe at supply if it happens to poke through. Pretty big area here from 39.12 to about 39.36. So
okay,
we'll have to see how price reacts when it gets there, if it gets there.
All right. So basically flat, waiting to see what happens here. Any success from the highs going down into demand?
Yeah, well, we shorted. I shorted, and then bought at demand. So I didn't short from the top. I wasn't that lucky.
All you had to do was sell it Friday. You didn't have to get the top, right?
Right. Yeah. Well, I made a few shekels. I've been really focusing on some other commodities and things in the interim because the market has been bad for my accounts.
Yeah. Okay. So what commodity markets are you focused on? That
natural gas, gasoline,
oil, so energy.
Yeah, energy. Also, gold and silver. Been trading that intraday mostly. It's a kind of hard market to do on any swings with because it's just choppy price action. So taking whatever small gains we can get.
Okay. Is this the only chart you want to show us here today?
No, I'll show you. I'll show you some.
All right.
Let me show you natural gas.
I love your charts. Yeah. Okay. So let's take a look at nat gas.
Yeah, go to the weekly.
Wow. Yeah. Okay.
This played out. We played this small white ABC within this larger yellow ABC right up into this reversal zone for D. You can see both the white and yellow D were pointing to this area here. And then it got rejected, and now we're on the way down. This was all a result, obviously, of the Arctic blast that came in through the Texas and the rest of the United States. And really surprisingly, it didn't even get really above 325 area, barely. I thought maybe we could go higher, but it didn't.
What do you think? What do you think from here? Could this be a failing rally, and we're going to retest or take out C?
I think I'm going to go to a daily here. Make it less confusing. I think we're coming into a supply zone, demand zone here. If it doesn't hold, we're probably going to hit T1, which is the reversal zone for D, the first reversal zone, which lines up nicely with this long-term trend line. So somewhere in this area, don't know where. We'll see if we're going to find support for maybe a rally into shoulder season here. If not in the breaks, then there's a demand down here, and then there's T2 all the way down here, and we have this gap filled from back in September that never got filled. That eventually I think is going to get filled sometime probably this summer.
Where does that come in? Around 212?
Yeah, 213.4 to be exact.
Okay.
So let me see. As far as crude is concerned, I'm really looking at the bigger charts.
Yeah, longer term.
Yeah, because it's been crazy. But you can see here, I had this consolidation box, and it broke out. And now we're heading into this long-term supply overhead, and we'll see if we get a rejection there. We're back up to pre COVID-19 at levels here. So I'm not so sure what this is all about at this point. I'm not sure it's going to sustain, but I expect a reversal from the zone, and then the RB is kind of a similar pattern.
So you're expecting this rally to fail into this?
Yes.
Okay.
I could just find my chart. I'll tell you in a minute. There we go. So again, this is the monthly view. If you look at the weekly, we'll go ahead and right into supply here. Yeah, I think this is all part of last week's shutdown of plants and stuff. So I'm expecting reversal. I don't see how gasoline is at this price, based on the economy at this point. I could be wrong. Right now I'm getting scored.
Yeah, I mean,
short,
who would have dreamed that almost every asset class, every instrument would have recovered and taken out or challenged the highs pre-COVID before the crash.
With all the liquidity they're pumping into the markets, I guess there's nowhere else to go.
Yeah, one asset class that hasn't, that's actually suffered, has been like TLT. I'm wondering, what you're thinking here. TLT it's almost back to the COVID crash levels, and there's hardly anyone bullish bonds anymore. So I'm wondering if there's something contrarian setting up here.
Well, for me right now, I'm looking at this buy zone. I'm actually have a position that I carried over that I'm getting actually crushed on, but I'm waiting for this zone to get hit and see what happens. I think this is going to bounce from here. I don't think yields are going to sustain much longer. That's ZB. This is ZN, kind of similar.
Yeah.
And if we look at the TNX.
Yeah. Right back to breakdowns. Yeah.
Yeah. I think this is going to, it keeps making divergent highs, but the divergence keeps holding. So I think that we're going to pull back. We have all these gaps down here that I think are going to fill. Obviously, this one down here is a long way away, but certainly. We can get here on whether the Fed does something to talk it down or increases bond purchases or something, or maybe even China.
Or how about S&Ps fail from your supply side and trade at 3,700? That could bring in a little bit of a softening of rates and a little bond buying, don't you think?
Yeah, there's a whole bunch of possibilities of what could be a catalyst. I'm not sure which one is going to play out.
Yeah.
But all I know is the government really can't afford rates to go too much higher.
No, they can't.
Not
with this kind of deficit.
No, it's crazy.
Yeah. Anything on something else that's pretty one way, Joe, and has been for a while, is dollar bearishness. And everyone's bearish for a while.
I've been bullish, as you know, right? So it's just been choppy. And let me look at the monthly here for a second to show you what if I can find it. I think I got the wrong chart here. Hold on one second. Yeah. Sorry, got too many charts here to keep track of.
That's okay. You're a market. You're a scanner.
Yeah. Okay, so this is the monthly. You can see we had divergence here back in 2014.
Right.
Right up. Got a divergence here back in 2018. Shot back up as price came into demand. And there's long-term monthly demand. This is a strong zone, so it's going to be hard to break. I think and it's only really the second time it's been around here. So. I'm still expecting this to go higher, but this red zone here is critical. If we can't get above 94.5, then we're just going to come back down. It's going to be a dead cat bounce. But right now, we got positive D, and we'll see. And on the lower time frame, you can see we have positive divergence also. That now again we're struggling to get through this 91 area. It got failed here, but once we can break above 92.25, let's say, I think we got a shot to go higher. So
I mean, as bearish as everyone is, we haven't made a new low for what's this, a weekly chart for almost a couple months, or a month or so.
And I don't understand the bearishness, because I think the eurozone is they're printing faster than the United States is. So the theory that somehow the U.S. dollar is going to be worse off than the euro doesn't make any sense to me. So that's why but it's been choppy. You can see I think we're basing here. We're just trying to chop it around, forming a base, and then we're gonna break out higher. One of the I'm sorry.
Go ahead. No, go ahead.
I was going to say one of the other instruments I was looking at here is I'm looking at coffee. I think coffee is a short supply.
Okay.
Now it's been on a rampage. I don't have KC futures, but I use this as a proxy.
ETF they have ETFs on all these different commodities now, on cattle, on the grains, on everything.
I prefer the futures, but I don't want to pay I don't want to pay the ICE price for the feed, so I just use that.
Oh, I see. Okay.
So
all right.
Anyway, I think this may be a short once it gets into the $40 range here. And then the other thing is, if you look at currencies, they've been playing out pretty much the way I expected. If you look at the daily, daily
still looks good. Yeah.
We had this nice ABC. I thought maybe D was done, and then I posted the other day. I said, look, I'm not so sure because we're starting to see some consolidation here, and now we popped today. I think we're headed up here, but we have a negative divergence, so it's going to set up another negative divergence for the next leg down, at least in my opinion. And then if you look at the yen, it's just the opposite. We're going down, but we got positive. So
could be a three drive formation.
I was just going to say that. I know you like those 3 drive patterns, and setting up for one.
I'm a one-trick pony, Joe.
Hey, that's all you need is one thing to make money in this market,
and they don't always work. So
nothing always works.
Right. So okay, nice looks.
You want to see gold?
Yeah, I do. I'm interested in what you're thinking here. I have it as a big descending triangle, and look, you do too.
I got both. I have a descending triangle and I got a channel. Now, which one plays out? I don't know. You can see the bottom here for the triangle.
Right.
But this is a continuation pattern, right? So technically, this is supposed to break out if this triangle.
Right.
But if it fails and we break down here, and certainly if we break through 1669 here and this channel, and we're going to go lower. I can't see the future, but
that flat line. I mean, that formation, if you take it seriously, which I have a hard time doing, is like a $200 formation that would take you under 1600.
Yeah.
Which I was looking for more like 1680 from months ago, but that's what the formation says. It would be, I think, about 1580 or something like that, a measured move. A descending triangle.
Of the descending triangle, absolutely. But we're going to see what plays out. But we have this demand zone here, so I think from a shorter term perspective, if we do dip into here, we'll probably get a little bit of a bounce. Nothing's going straight down, but I think this demand zone is what I'm waiting for a nice long for me, at least for a short term to midterm play, and then we'll see, because this could just be a bullish underthrow, and then boom, this thing takes off. Everybody starts shorting, thinking this triangle is breaking down, and then it breaks up. But again, right now it's bearish. I mean, you can't argue it's lower highs and lower lows. So, whether that's going to continue is another question. We have like a double bottom here, so on a weekly. So we'll see how things play.
Silver looks better, doesn't it?
Yeah, actually, I have silver here too. But now you mentioned, see, you're like my trading warrior buddy.
We are. We're kindred spirits. All right. So
I was actually looking at this ABC on this short 1 hour time frame. I was long this morning, and this dollar pop just stopped me out.
Right.
But, this could still go higher, but I think overall, silver is looking a little more bullish. If I could find a longer term.
Maybe we have to take out A first. Maybe this is C. The first break A and then the bounce B, and we get a C.
Yeah, it could be. I mean, look, this is off of the shorter time frame, so I don't know. From the daily perspective, I know I have a chart here somewhere. Maybe not. Hang on, let me see.
Yeah, there you go.
Yeah, that wasn't really the chart I was looking for, but I don't know where it is. Somewhere around. Oh, here it is. Okay, so we've been chopping around this between the support and resistance zone. So I'm waiting to see if we could break above this 28 level, really. And then you get back into what was a former supply zone, probably a little larger now.
Right.
But, 29, 30 area is probably key. But it definitely, you can see, I mean, from the daily, it's higher highs, higher lows. The weekly is also looking more bullish than gold, right? You can see.
Yeah.
It's
held up better, the gold silver ratio.
Absolutely. And it could be that, silver, I guess in my thought, is industrial metal. So if the economy is going to start picking up, maybe there'll be more of a need for it. So I can see silver being more bullish than gold right now.
Are you going to accept the vaccine?
I haven't decided yet.
Okay.
I'm letting everybody else be the guinea pig, and then I'll figure
All
it
right.
out.
Well, I had one dose.
Oh, you did?
Yeah. So I'll let you know what happens after number 2. And Joe, one of the things that I don't always ask people, but it's pretty important, and I want to wrap it on it. What would you say your edge is in the markets? You ever think about what your edge is?
Well, yeah, all the time. I tell my subscribers that you don't want to enter a trade unless you have some kind of edge that you don't want to enter into a trade long or short on a feeling, right? You want to have something, whether it's technical, or preferably more than one technical indicator to kind of give you an edge. So most of the time, I look at supply and demand levels and try to combine them with other technical analysis, such as trend lines, moving averages, triangle structures, or wedges, anything that'll give me some kind of clue, along with, of course, divergences are my biggest clue, because I just think that it's giving you a foreboding sign of what may happen. Now, they don't always work. Nothing always works in the market, but I've had good success using that combined with the other indications to try to give myself an edge. So if I have an ABC pattern coming in and we're coming into what may be a reversal zone for C, I look for a divergence. Is there a divergence that's looking to confirm that? Now I have two signs that point to a possible change in trend, and if I want to go long or short, that gives me a little bit of an edge.
Okay, so really the answer is, I know you were in law enforcement, but in the markets, it's almost like being a good lawyer, isn't it? The more evidence
Correct.
you have to build the case to take risk, the better.
Yeah, no, absolutely. It's like being
Confluence. Yeah.
Detective lawyer, same thing. You build your case based on the evidence, and so you'll try to find facts that support your, to support what your trade wants to be, whether it's long or short. And if it's not there, you don't enter the trade. That's simple as that. Like even here, like if you look at this 30-minute on ES, we have a negative divergence that's forming because we have a higher high.
Right.
And then we have at least my MACD is making a lower high. So this is telling you, I was telling you when it was here, that we're
right.
pullback, right? So now we're at support. So you can't take anything on its own. You have to look at everything together. But you see, we have this support zone here.
Yeah.
Right. So we're at support.
You take partial, for example, if you had sold it up there, would you be taking partial profits here? Do you take partials?
I probably take all profits.
Okay. All right. You're like me.
I'm in and out, man. I hit and run. I'm like a monkey with the banana. I take that. I take it.
Well, you're not. You know what? You're no monkey to me. You're really have some skills, Joe, and that's why I keep inviting you back.
You know it is. This market is so choppy. You can't hold for long periods anymore. It's just like you get to support. You can't. You don't want to risk losing those profits. So you just take it. Just take it. The market becomes more amenable to swing trades. Right now, it's just choppy.
Yeah, a lot of sideways action in the market. Market's trying to resolve itself. And Bernard Baruch had a very successful career saying, "You never go broke taking profits," or "I take profits too soon," is what he used to say. So I'm like Bernard Baruch. I make the tough money, and then the windfalls happen without me.
Yeah, correct. It only happens
right?
after I exit. Then it goes the way I want.
Yeah. Anyway, Joe,
waiting for me.
Yeah, it was great. It was great having a nice conversation with you and some looks with your black background on your charts, and really appreciate you running through all these different instruments. And you are my trading warrior buddy, brother, whatever you want to use for B. I appreciate your work.
Okay, my friend, I appreciate you having me on, and thank you again, and best of luck to you and everybody who's trading out there against these markets. Tough time.
Thank you, and same to you and all the people that you share your ideas with, Joe. Appreciate you being here today.
You're welcome.
And we'll have you back. Maybe how about May? I'll send you I'll send you a message on Twitter.
Sounds good.
All right. You're welcome, Sinatra,
right,
Monica, everyone. They're thanking you, Joe, for sharing your work, and we'll see everyone tomorrow. Good hunting the rest of the day. You're welcome, Brock. Damien loves these meetings. Okay, we'll spread the word. And that's a wrap. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow. You're welcome, Sonny. Thanks again, Joe.